Okay, today we're going to be covering an adaptation of work by Brent N. Steinberger, PhD, entitled Trading as Mental Warfare. And writings on psychology of trading commonly view emotional conflicts and reaction patterns as impediments to successful trading. Accordingly, these advocates advocate various therapeutic and self-improvement exercises to remove these obstacles. An article by Dr. Steinbrenner proposes a very different perspective, trading as a military activity. So basically what we've covered up until this point is, neuro-linguistic programming, neural-associative conditioning, understanding trading the trading mind, and basically looking at conflicts and reaction patterns, or basically the conflicts that we have and the reaction patterns that we institute as impediments to successful trading. So we've looked at that already, and how our actions, how our thoughts, how our processes, hinder our ability to make rational decisions inside the market. We're now going to look at it from a very different perspective, which is, trading as a military activity or a military exercise. Specifically, he draws upon the writings of Colonel John A. Boyd and demonstrates that successful trading requires superior strategic prowess. As we shall see, this implies that one's growth as a trader may be more fruitfully pursued through systematic combat training than through traditional self-help exercises. What he's basically suggesting here is that having a fixed rationale of how you enter or exit the market, or having a process by which you go through in evaluating conditions, is going to show more success than simply just working out of a self-help book. And you've heard me talk about this before, about the importance of having those rules of engagement laid out. How we know what we know. While Colonel Boyd is most identified with his OODA, which is an acronym for Observe, Orientate, Decide, and Act framework for decision making, in combat, his writings extend well into philosophy. Boyd was interested in epistemology, the study of knowledge, and its acquisition. In this respect, his interests and his thinking parallel those of Swiss researcher Jean Piaget. An understanding of Boyd and Piaget's work will prove helpful in grasping the mental warfare of trading. Boyd described understanding as the process of creation and destruction. Described the understanding as a process of creation and destruction. As David S. Faddock explains in his excellent thesis entitled John Boyd and John Warren, Air Power's Quest for Strategic Paralysis, Boyd equated creation with synthesis and destruction with analysis. In the face of changing realities and new information, identify changing realities and new information. Do you think in the market that there are constantly changing realities and new information? In the face of changing realities and new information, people create fresh mental images of the world. In the face of changing realities and new information, people create fresh mental images of their trading. They analyze new events and information and synthesize these into updated perspectives. In conditions of war, this facilitates adaptation to the uncertainties of battle. So as our realities and new information are created or brought into the picture, people create fresh mental images. They begin to adapt. And in a war-type setting, this facilitates an adaptation to the uncertainties of combat. They further explain that adaptations in wartime requires mental agility. Does trading require mental agility, a process of reaching across many perspectives, pulling each and every one apart, analysis? All the while, intuitively looking at these parts of the disassembled perspectives while naturally interconnecting with one another to form a higher order, more generally elaboration of what is taking place. So, in plain speak, what they're saying right here is that in a combat situation, in trading, if we're thinking about our trading as mental warfare, that as changing realities and new information, as the market changes, we create fresh mental images, or our perception of the current situation changes based on the new information. And in order for us to analyze these new mental images and conditions, we create an adaptation. Facilitates adaptation to the uncertainties of battle. So we're allowed to adapt to current market conditions because we recognize when the new information comes in, we create new mental images. Students of psychology will find echoes of Piaget's writings and Boyd's theory for knowledge. Both men are constructionists. They emphasize the process by which we assemble our understandings of self and others. In place of creation, synthesis, and destruction analysis, Piaget refers to assimilation and accommodation. These he viewed as twin forces that allow individuals to maintain a dynamic cognitive equilibrium. While what Boyd refers to as mental images, Piaget calls schemes, mental mapping. When we encounter events that do not neatly fit within our mental mapping, we try to reinterpret those events and assimilate them into our current mental maps. If such efforts of assimilation fail, we are forced to accommodate to these new realities and revise our mental mapping. So basically what he's saying is as new information arrives, we immediately, our first instinct is to interpret those events within our current framework or within our current realities. But if we can't do that, then we're forced to alter our perception and our reality. In his comprehensive book, The Developmental Psychology of John Piaget, John Flavel summarizes a perspective that could be equally applied to Boyd. The subject is constructed to be an even organized entity which accommodates its mental maps. Boyd emphasizes that this complexity is a precondition to survival in life and in war. In his well-known presentation, Patterns of Conflict, Boyd explains, it is advantageous to possess a variety of responses that can be applied rapidly to gain sustenance. How do we apply this to trading? It is advantageous to possess a variety of responses, a variety of trading systems, a variety of concepts, a variety of filters that can be rapidly applied to avoid danger and diminish the adversary's capacity for independent action. To shape and adapt to change, one cannot be passive. Instead, one must take initiative. This is critical here. To shape and adapt to change, one cannot be passive. Instead, one must take initiative. It is not enough, traders, to sit on the sideline and be passive in the market. You have to be aggressive. When you see the opportunity that is in front of you, you have to move to take it. Application here. Be predictive in our thoughts and action based on specific rules, based on trading in both risk and no risk environments. Having the rules of engagement set into place. Understanding, and when we see specific things happen in the market, that we are preconditioned to respond in a specific way. In other words, the accuracy and speed with which individuals can revise their mental maps in the face of new realities will facilitate their survival. The faster that you as the trader can revise your mental maps or revise the process when you receive new information, the faster or the longer you'll survive, the more likely you will be to survive. This simple principle forms the basis for a new perspective on the psychology of trading. Now, who was Colonel Boyd? Colonel Boyd was a fighter pilot who chose aerial combat as his point of departure for his military theory. He was renowned for his challenge that he could place his plane in a position of disadvantage and outmaneuver any pursuer for strategic advantage within 40 seconds. Boyd never had to eat those words and thus earned the nickname 42nd Boyd. He attributed his success to his ability to outthink his adversary by making unexpected maneuvers at opportune moments. Unexpected maneuvers. How many times has the market thrown an unexpected maneuver at you? How many times have you been thrown that curveball? By making unexpected maneuvers at opportune moments, he left his pursuer temporarily confused, opening a window of vulnerability and opportunity. The market is going to throw unexpected maneuvers at you all the time. They're always coming out. You think the market's going long, and then all of a sudden it reverses position on you. You're looking for that ABCD pattern, and then before you know it, the market rolls over again, and you may be looking at a Gartley pattern. You may be looking at another pattern setup. How quickly can you adapt to those maneuvers? If you don't react quickly enough, you're left temporarily confused and are open to vulnerability and opportunity. Boyd refers to these maneuvers as fast transients, rapid, unexpected actions that violate the mental images of the enemy. In Patterns of Conflict, he notes that the idea of fast transients suggests that in order to win, we should operate at a faster tempo or rhythm than our adversaries. Who are our adversaries in the market? Other traders? The market in general? If thinking of this in terms of trading as warfare? Echoing Sun Tzu, he further explains such activities will make us appear ambiguous or unpredictable. Does the market sometimes seem unpredictable to you, like you can't figure it out? And thereby generate confusion and disorder among our adversaries. Since our adversaries will be unable to generate mental images or pictures that agree with the menacing as well as faster transient rhythm or patterns they are competing against. What Boyd is saying here is that if you want to win, you have to act faster than your opponent. You have to be better prepared. You have to be able to update your mental maps faster than the other traders. The other traders are able to do. And in so doing are able to make decisions quicker than anybody else. Think about it in divergence trading, being able to recognize the ABCD pattern, building the CTS score. You saw all of a sudden you decide to sell in the middle of an upward moving market. Traders are out there think that you're crazy for being a counter trend trader, but you've seen something. You've allowed yourself to update your mental maps faster than anybody else, and you're aware of new realities quicker. Thus, you're able to take a position with extremely low risk, with extremely high probability of reward, simply because you're able to react faster. Victory in war, Boyd believes, is primarily mental victory. By confusing and surprising the enemy, we wear down his ability to comprehend, adapt, and resist. The aim of Boyd's maneuver warfare is to render the enemy powerless by denying him the time to mentally cope with the rapidly unfolding and naturally uncertain circumstances of war. Traders, the market will do this to you. What Boyd is talking about, the market does to us, it can do to you on a regular basis. Confuse, disorientate, leaving you powerless, and denying you the time necessary to mentally cope with rapidly unfolding and naturally uncertain circumstances. You've got to be on top of things. You've got to have that plan. You've got to know exactly what you're going to do when a certain thing arrives. And you've got to be predictive enough in your analysis that as those things start to line up, you can identify 2 or 3 different options. 2 or 3 different scenarios that may play out, and how you will handle each of those scenarios. One's military operational aim to create and perpetuate a highly fluid and menacing state of affairs for the enemy, and to disrupt or incapacitate his ability to adapt to such environments. The winner in conflict is the one who is able to operate within the mental images of the adversary, Once you know your enemy's mental maps, you can select opportunities to operate outside the parameters of those maps, bucking the conventional wisdom. You can select creating temporary disorientation. While the enemy is struggling to assimilate your new actions and accommodate to them, a window of vulnerability opens. In this lightning process, requiring rapid judgment and action, as in the case of the 40-second dogfight, you've got to be able to move quick. When the market pulls back into that 382 retracement, you've got to be ready with those buy stops. Market moves up into a double top high. Bearish divergence, Fibonacci extension at major structure resistance. The second that market closes, that candle closes, you've got to be ready to sell next bar market. You've got to be on it. The goal of such fast transient maneuvers, Boyd wrote, is the enemish adversary in an amorphous, menacing, and unpredictable world of uncertainty, doubt, mistrust, confusion, disorder, fear, panic, chaos. Listen, look at this. Look at all of these words: uncertainty, doubt, mistrust, confusion, disorder, fear, panic, chaos. All things that we deal with in the market. Things that the market can do to us if we're not prepared. One can find many examples of Boyd's principles in competitive sports and games. The successful chess player stays one or more moves ahead of his adversary, using surprise moves to break the opponent's strategy and create demoralization. The champion heavyweight boxer Muhammad Ali repeatedly used psychological warfare to surprise and disorient his opponents. So we see this across broad markets, and I want to talk now a little bit about our OODA loop, which we call IPDE, identify, predict, decide, execute. Suppose we as traders were to duplicate the fast transient maneuverability of Colonel Boyd and became 40-second traders. How might we operate? First, we would go through our trade stations and observe what the markets are doing. Is it rising, falling, consolidating? Are we in bullish trend, bearish trend, or are we in a channel? Is volatility increasing or waning? The IN identify in the IPD quadrant has us identify the market conditions. Everything that we do, stimulus and response, our stimulus is entirely derived from what we see on the charts. Entirely. And so, as we come to the market each and every day, we have to first identify what is the market doing. We do that by looking at the chart. Second, we would orientate ourselves by placing the market's present action into context. Is the current day's activity occurring within a larger trend or within a broader trading range, higher time frame, breaking down the charts? What is the movement of interest rates, overseas markets, commodities? What else do you apply inside of your rules of engagement to help you get a broader perspective of what the market is currently doing? The second one is P, predict, the future directional movement of the market relative to historical price patterns. What do we anticipate based on what we have identified? What do we predict the markets are going to do next? Third, we would decide upon a course of action once we had integrated the market's current action with the broader context of financial and economic forces. Our decision would be based upon the mental images of the situation we had created, such as a topping market gaining downside momentum or a rising interest rate environment. Again, you can see the mental images used here. So consider your visual price patterns and then your neural associations that you've created and then burned in with action steps attached to each one. Finally, once we have arrived at a trading decision, we would need to act and place our orders based upon our mental maps. Our actions would reflect our judgment as to the relative value of the market, where the market is probably valued, whether the market is properly valued for a purchase or a sale, as well as our assessment of the proportion of assets to be devoted to the trade. So encompassing all of the things that we're looking at, whether we believe that the market is going to go up, down, continue sideways, we make a decision as to what we plan on doing, and then last but not least, we act. Execute is the final part of the acronym and takes us to the execution based on specific rules of engagement. Questions to ponder. What are the vulnerabilities of your opponent? What are the vulnerabilities of the market? Who is your opponent? How would you gain the mental edge how would gaining the mental edge affect you on a daily basis? What are you currently doing to become a more proficient trader? This is a good one. What are you doing to become a more proficient trader? What steps are you taking? So, trading is mental warfare. The preceding exposition of Boyd's ideas, from epistemiology to strategy, provide the foundation for which we can understand the challenges of trading and financial markets. Like the battlefield, trading offers an environment typified by risk, danger, and uncertainty. Trading also occurs in an environment that rewards the efficiency of mental processing. The successful trader is one who can rapidly observe market conditions, orientate himself, integrate information into effective decisions, and quickly act upon those decisions. Indeed, a floor trader may need to operate with OODA loops that are tighter than even those of the 40-second Boyd. As information is coming in, floor traders are out there. They don't have time to look at a chart. They don't have time to weigh chart against chart. They have to be willing to act, and they have to act immediately. You, as well as a trader, in order to be effective, are going to have to be able to react to changing market conditions quickly and efficiently if you want to be successful. Who, however, is the enemy in trading? In one respect, the adversary consists of other traders operating in the same markets. The futures market are a zero-sum game, and if one is to experience consistent success, it must be at the expense of other participants. How do you feel about that? How do you feel about the fact that when you win, someone else had to lose in order for you to win? The trader who watches volume picks up on a false breakout or late in the rise or decline can utilize this information to enter the OODA loops of other traders and craft strategies that exploit those loops. Knowing where the average trader is likely to place stops, for example, permit the experienced trader to enter the market just before these are hit, capitalizing upon the miniature panic of liquidation. How many times have you been one of those inexperienced traders that have your stop set too tight to a major structure support area or resistance area, only to see the market break through and then immediately pick up steam as those stops are triggered? You're taken out on your trail stop only to watch the market reverse and go the other direction, and you're left pounding your desk and angry, wondering why the market has screwed you over again. Other traders were inside your OODA loop. They were acting faster and more efficiently in the market than you were, and thus were able to take advantage of you and take your money. Larger traders may even issue their own disinformation, masking their intentions to buy or sell, or leaking misleading information to draw in bulls or bears. How many times do we see one of the major banks put out a buy rating on a specific currency pair, and we watch for that immediate rally, only to see that market fall off as soon as the news comes out? Why does that happen? Is it misinformation? Is it disinformation? Someone unloading a position, playing off of the OODA loops of other traders. Trading in this context is a chess game with each player pitted against others in an ongoing series of moves and counter moves. Boyd's ideas, however, raise a more intriguing possibility in which the adversary in trading is the market itself. When you're trading the S&P, you are not merely trying to enter the OODA loop of rookie trader Joe Blow. You want to enter the market's OODA loop as well. Like an enemy in wartime, the market masks its intentions with false moves, quick thrusts, and lengthy periods of inaction. Boy, we experience that every day, don't we? Market gets really exciting, and then all of a sudden, a long string of sideways trading of inaction. In executing its function of efficiently allocating resources to enterprises and rewarding the prudent assumption of risk, the market must adapt to trading patterns of the majority and indeed must frustrate these patterns. Capital markets would cease to function if over the long haul they failed to reward the assumption of risk. Once the herd identifies a pattern within the market, following this pattern becomes the safest course of action, the path with least risk. This must, over time, be punished. You understand what he's saying here is that we get on these long trends where everyone sees that the path of least resistance is to buy in upward markets. In order for the market to reward risk, it has to, over time, punish people for doing the safe thing. It must punish people in order for the market to function. Otherwise, things will just continue to go up and continue to go up with no risk and no fear that the market would ever turn. The market must, over time, punish people who follow the path of least resistance. It is this tension between the risk aversion and the majority and the need for rewards to disproportionately occur to risk takers than makers. It is the tension between the risk aversion of the majority and the need for rewards to disproportionately occur to risk takers that makes an adversary of the market. We see this in numerous studies of mean reversion in the market. High volume stocks that have outperformed the market tend to underperform the market over a period of years. Low volume winner stocks tend to outperform. Low stocks tend to rebound, offer superior returns compared to winning stocks. The market tends to rise when a weak open follows 2 or more days of decline. It is prone to decline when huge buying interests measured by the tick fail to move price significantly higher. If it is obvious, market guru Ganville used to say, it is obviously wrong. The successful trader cannot merely follow the market, but must outwit it. You've got to be on your A game. He must figure out what the market operating within. He must figure out what the market is doing and act before the market has completed its move. This is what it means to operate within the market's OODA loop. Once a trader figures out how the market will punish risk aversion and reward risk assumption, he has tightened his own loop and can outmaneuver the market. So what we're saying is if the market has to punish risk aversion or those that follow the path of least resistance, then our goal as traders is to identify when and where situations present themselves where that is likely to occur. And by doing so, we now enter the market's OODA loop. We enter the market's thinking process, and we are able to act quicker than other traders, and thus take advantage of situations that those who are risk averse are not able to take advantage of. Conversely, when the trader falls for the market's feats and parries, he enters the realm where the market now operates within his OODA loop. The market is shifting tactics faster than the trader can observe, orient, decide, and act, creating chaos and eventual demoralization. An important market corollary of Boyd's work is that fear and greed are not primarily emotions in trading. Rather, the psychologically minded trader should look for the appearance of certainty versus confusion. Before the trader will fall prey to anxiety or depression, he will be confused. He will fail to update his mental images to account for shifting market realities. By the time he has orientated and formulated a new course of action, the market has made its move, leaving him in the red. This happens, traders, when we see huge time periods of massive expansion in the markets. U.S. stock market, when it was continued to go up and up and up from 2000 all the way to from basically 2003 till 2008. People didn't want to believe, regardless of the news, regardless of what they were seeing in the chart patterns, regardless of what was coming across. Every CNN was spinning every bad news event in a good way and was blowing out of proportion every bad news event. And what happened is the market was unprepared. it couldn't update its mental images to account for shifting market realities. By the time traders had orientated and formulated a new course of action, the market had made its move, leaving them in the red. Only then will the emotions of fear, of recrimination enter the picture. Nothing, however, left with demoralization, the trader may conclude that his emotions are his enemies. Nothing, however, could be further from the truth. In reality, the trader's emotions are giving him useful and meaningful signals. The calm feeling of certainty, known to every experienced trader as something referred to as the zone, suggests that the trader is operating within the market's OODA loop. Conversely, confusion and disorientation are sure indicators that the market has invaded the trader's mental maps. Von something or other stressed that defense was the essence of every war. Similarly, the decision to avoid trading during periods of confusion may be the trader's greatest weapon. Knowing when to fight is every bit as much a tactical advantage as knowing how to fight. When we talk about coming to the market, we say, have I had a good night's sleep? Am I refreshed? Am I focused? Am I in a positive state? Or I know I'm going to be able to be confident in the market and take the trades as they come. If the answer is no, then are you going to make a decision to trade, or are you going to stand aside? From the perspective of Boyd's military strategy, the primary objective of trading psychology is not to overcome emotion, but to create conditions conducive to the zone. Therapy or self-help psychology alone cannot accomplish this, not in trading and not in war. Certainty can only be achieved through experience and superior training. No amount of positive thinking, visualization, or any other myriad of self-help methods can substitute for the experience of having observed and oriented oneself under a variety of market conditions. This is time and effort and energy, traders. This is putting together your trading plan, having a firm, fixed set of rules, knowing exactly what you're looking for. This is the other piece of the puzzle. We talk about putting yourself in a positive state of mind. We talk about putting yourself in a position to win. Neural-associative conditioning, breaking bad habits, installing new habits. Deciding, making a decision to be successful. On the flip side of that, we have to be able to gain a tactical advantage over the market. And the only way that we do that is by having a clear set of rules that allow us to enter and disorient our opponent, enter into his OODA loop, and make decisions faster than he can. And the way we do that is through IPDE, identify, predict, decide, and execute. Training for traders. Speed, speed, speed is the essence of war and trading. Don't delay, Patton advised. The best is the enemy of the good. By this I mean that a good plan violently executed now is better than a perfect plan next week. Greatness in war has always required boldness and the ability to strike quickly. While impulsivity may have its cost, indecision is a greater threat. How many times have you been stuck in the market and you don't know whether it's time to get out or whether it's time to double down? So you move the stop. So you take the profits off early. That's inaction. That is failure to make a decision because you're not sure what you need to do. Speed is one element that distinguishes a trader from an investor. The investor has time to weigh alternative courses of action, research these, and implement them. Portfolios may be adjusted a few times per year, if even that. Traders, however, may place many trades within a day or even an hour. The floor trader has no time to conduct historical research, consult multiple charts, or read research reports. His OODA loop has been so tightened that it now operates at speeds beyond that of explicit thought. We talk about the 4 stages of a trader. Unconscious incompetence. I don't know that I don't know. To conscious competence, I know I don't know what I'm doing. We move from conscious incompetence to conscious competence. I know what I need to do. I can see the path. I'm working every day towards becoming a successful and profitable trader, to finally unconscious competence, whose OODA loop has been tightened, that it now operates at speeds beyond that of explicit thought. You're operating without thinking. This creates an interesting psychological dilemma. The rapid trader is like the baseball hitter facing the 95-mile-per-hour fastball. While he may enter the situation with a strategic aim to bunt, hit to the opposing field, protect the plate, he has no time to consciously observe, orientate, decide, and act as each pitch arrives. The OODA loop is implicit rather than explicit, drawing upon years of experience watching the release of the pitcher, the rotation of the ball, the location of the pitch, etc. Indeed, any attempt to formulate an explicit strategy is apt to interfere with the batter's normal swing. Like a Zen archer, the batter must perform his action naturally without interference of the conscious mind. The pitcher, on the other hand, doesn't want the batter in the zone. He wants to disrupt the batter's rhythm, creating uncertainty. And, in Boyd's world, fold the adversary into himself. A pitch thrown too closely inside will create disruption, encouraging the batter to think about his safety instead of the next pitch. A fastball down the pike on an 0-2 pitch similarly attacks the hitter's expectation by violating the normal tactic of attempting to get the batter to swing at a pitch outside the strike zone to avoid the strikeout. The duel between pitcher and batter is an effort to outthink the opponent and enter his loop. The pitcher wins if he can make the batter think. If he disrupts the faster transient maneuver forces the batter out of the implicit processing of the zone. Similarly, the market wins most battles in which the short-term trader no longer functions automatically. Traders frequently ask me how they can sustain more positive thinking during their trades. My response is that they shouldn't be doing any thinking at all. If they're thinking, the market is most surely inside their loops. Consider the example of driving. Under ideal conditions, you're not thinking when you're driving. You may be listening to music, carrying on a conversation, or daydreaming while performing your driving automatically. If you have to be thinking about your driving, it is because some hazardous road, vehicle, or weather condition have arisen, or because you become lost. At those points, you are adapting to abnormal reality. You're exiting the loop of the automatic and entering the explicit thought suggests that you are no longer fully in control. We've talked about driving down the highway before and how you can kind of wake up after a half an hour and just be like, wow, I can't believe what just happened. Has it really been a half an hour? I was just in another world. You're operating on autopilot. It's automatic. The goal is to make trading automatic, to see the OODA loop. Trading is automatic, so to so tighten the OODA loop that is no longer consciously driven, moving you from a state of conscious incompetence to conscious competence through the consistent process of mentoring. This can only be accomplished through training, repetition, and exposure. Consistent drilling are needed to make the learning automatic. In wartime, soldiers perform heroic actions, not so much because they lack fear, but because they are trained to do the right thing under pressure. Men are seldom born brave, but they acquire courage through training and discipline. The Roman military strategist Venticus observed, "A handful of men endured a war proceed to certain victory, while on the contrary numerous armies of raw and undisciplined troops are but multitudes of men dragged to the slaughter." A careful inspection of trading methods in sports, law enforcement, and military suggests that superior performance is cultivated through intensive drilling under simulated conditions that mirror the risk of danger of real-world challenges. Demo trading? Read demo trading there. Soldiers, astronauts, chess players are pushed by their mentors to face scenarios that violate normal expectations. Only then can they develop the proper mental pictures that will orientate them and guide their actions under threat. Facing these scenarios repeatedly tightens the loop and allows for rapid execution and decisions. We are what we repeatedly do. Excellence, then, is a habit. The goal of trading psychology is not to create favorable states of mind. Rather, the goal is to create winning habits. Perfect practice makes perfect. Repetition is the mother of skill. To so prepare the trader for any scenario that he will remain inside the market's loop even during periods of abnormal trending and volatility. Understanding that no system works all the time and accepting that volatility and unexpected scenarios are part of the business helps to create realistic expectations. How can we train superior traders? There is nothing so practical as good theory. Trading theory and logic-based models will further your process of acceptance at a deeper level, the subconscious mind, and lead to congruency and action based on deeply internalized beliefs, backtesting, theory and logic, modeling. Memorization of the rules of engagement will allow you to act in real time in the market with astounding consistency during your desired outcome. To cultivate decisions making within a 40-second loop, traders must train their fighter pilots. Must train like fighter pilots, You must learn to think and react rapidly in the face of market maneuvers. The market adversary is attempting to enter their mind-time space. Only superior information and processing of that information can prevent this from happening. The market is constantly trying to get into your space. The other traders are constantly trying to find that area where they can exploit weakness in the market. You must stay ahead of that game. Below are several practical directions for the training of traders. Number 1, the creation of multiple what-if scenarios during the trading day. Napoleon advised a general-in-chief should ask himself several times a day, what if the enemy were to appear now in front, or at the right, or to the left? By expecting the unexpected, we can create proper schemes for guiding our decisions and actions, taking the advantage of surprise away from the adversary or away from the market. What is this, traders? We do it every single day in the market. We take a look at the market. We identify what is likely to happen. To go one step further, we say, if this doesn't happen, what then do we expect? You hear me say it again and again. The market's going to do one of two things here. It's either going to break out of the channel or we're going to rally back into the channel. What if the market does this? What is our plan? What if the market does that? What is our plan? Creating multiple what-if scenarios, constantly playing that out in your mind. You see that everyone does that. Soldiers do it. Police officers do that. Scenario-based training, designed to get the individual thinking on their feet. The more scenarios they see, the more scenarios they're encountered with, the more decisions that they have to make in a practical environment, the quicker they're able to make decisions in the future. Intensive drilling under practice conditions. Nearest neighbor statistics methods are techniques that allow one to identify past markets that are similar to current markets on one or more dimensions. This is one of the most important parts of the pre-post market drilling that is necessary for further embed the NAC process for action based on all types of information presented. Backtesting. Going into practice mode, taking that information out, building that neural associative condition with our trading system, and then rapid drilling under practical conditions. A soldier trained in survival may be deposited into unfamiliar territory and then observe and see how well he copes. Rapid observation, orientation, decision, and action is needed so that the soldier will not fall victim to hostile environmental conditions, predators, and enemy action. Similarly, the trader can deposit himself in an unfamiliar market, drawn from his historical database, and rapidly execute trades. Like Boyd, the trader could issue a challenge to the market. Put me in a position of ambiguity and I will execute a winning trade with within 40 seconds. What do you notice about the language patterns here? Presuppositional. No might, no should, but will execute. That's very, very important. We don't do sometimes, maybe, we ought to. There's no ambiguity. If the market does this, then we do this, and we do it every single time. Again, the importance of internal dialogue. Zig Ziglar quote, "We all need daily checkup from the neck up." Take the time to identify your current patterns of behavior and actions. Identify your power trading state, knowing your rules of engagement are being followed without hesitation and being accepting of the results of the trade, willing to put the next position on without hesitation or fear of loss. This is hard to do, traders. It takes time. Being able to trade with confidence, knowing your rules inside and out, and knowing that if you continue to follow them that you're going to be successful. While beginning traders will no doubt require more than 40 seconds to execute their loops, gradually tightening the time parameters will greatly facilitate the automation of trading. Intensive mentoring. While we all admire self-made individuals, the reality is that superior athletes, soldiers, and traders are not created out of thin air. In fact, the very notion, someone is self-made, the idea that they had no mentor, they had no one to look at, they had no model with which to use, or someone to use to gather and glean information from is foolish. Everyone has someone that they use to create, help, and shape their reality. They are the products of years of training and mentoring. Whenever we see superior performance, it is the result of day in and day out teaching, drilling, and practice. Traders often hope to learn their craft in seminars and through books. They are no more likely to succeed in this hope than concert pianists, chess players, armies, or Olympic athletes. It is intensity of instruction that facilitates the internalization to the point at which learning is automatic and implicit. Indeed, it would not be inaccurate to say that the entire purpose of trading is to allow individuals to acquire the mental maps of their mentors so that they can eventually build upon these. I hope that your training does not stop with this course. I hope that you continue to grow and learn, that you continue to take what you have learned through the process of this course onto bigger and better things. These elements then form the core training core of training successful traders. Number one is education, teaching traders what to look for under different market conditions. Number two, drilling, performing regular exercises to build specific skills and practice. Rehearsing trading under realistic conditions to assemble the skills and superior performance. We've really just begun to scratch the surface of understanding the elements that contribute to trading excellence. Viewing trading as a mental warfare opens the door to learning from the study of all warfare and the moral elements that contribute to successful campaigns. Von Clausewitz once observed that war is filled with frictions, chance episodes that introduce uncertainty and doubt into the best laid plans. Is there any lubricant that will reduce this abrasion, he asks? Only one. What is the answer? Combat experience. For traders operating within their own frictions, training and experience may be the most effective therapy of all. Traders, this is a wonderful alternative view of looking at what we study every single day in the market. It is, in essence, the second piece of the psychological puzzle. The first one, gaining control of your own emotions, gaining control of your own mental state. And then opposing having the knowledge and experience and mental maps necessary to get inside the mind of the market and be able to react quicker and more efficiently than other traders in that market. I hope you'll continue to work and study and read some of Boyd's work. I think it will really add value to you as a trader and will continue to increase your knowledge on the subject matter. Till next time, good luck and good trading.